This giant tech once ruled the semiconductor industry has been struggling to stay ahead of the curve. Despite the booming demand for advanced chips, its stock has taken a nosedive, leaving investors wondering if this former leader can regain its footing. But behind the scenes, a game-changing development is taking shape. Can this single innovation be the key to turning these companies' fortunes around? Hey there, Tamir from Fibonacci-Traders.com here with a special Stock a Day video. So like, subscribe, and let's talk Intel. Intel, once the king of the semiconductor market, is falling out of favor with investors due to numerous negative sentiments. However, one of its most important products has made an appearance, and stock market investors might want to take a closer look. To understand Intel's problems, let's take a closer look to their most important product and final thoughts. Intel's year-to-date performance is down roughly 50% during one of the best times in the semiconductor space, especially for those dealing with advanced chips. Most companies like AMD, Nvidia, and Qualcomm are up a nice amount on a year-to-date basis, but Intel has continued to struggle. There are two main reasons why Intel's stock is down. First, the company is pushing more into its manufacturing endeavors, which is burning a lot of money. Intel needs to invest in equipment and research and development to manufacture advanced chips, which is costly. The second reason is that Intel is losing market shares in its core product to competitors and big tech companies. Intel's main products are CPUs, which are used in laptops, desktops, and servers. However, the company is facing competition from AMD, Qualcomm, and Apple in the consumer space, and from big tech companies like Google, Microsoft, and Amazon in the server space. These competitors are developing their own chips, which is causing Intel's financials to be weak and its revenue to not grow at levels that investors had hoped for. To address these problems, Intel is focusing on its manufacturing push, particularly with its Intel 18A node. This node is the last in Intel's 5-node and 4-year plan, and it's expected to be a game changer for the company. Intel recently announced that its Clearwater Forest chip, which is based on Intel 18A, will be out sometimes next year. If this chip is successful, it could showcase Intel's manufacturing strength and bring confidence to future customers. Intel already has 2 design wins for Intel 18A from Amazon and Microsoft, which could lead to more business and increased customer chips needs. Additionally, the US is focusing on building chips inland, and there may be Additionally, the United States is focusing on building chips inland, and there may be incentives for companies to build chip manufacturing plants in the US. This could lead to a bullish case for Intel, particularly if the US government provides tax incentives or monetary incentives for customers to purchase chips made in the US. Intel's secret weapon against TSMC, Taiwan Semiconductors, is that it's also a chip designer and one that sells a lot of chips. Intel can use its chips to promote its manufacturing business, which could be a bullish case. However, there are also cons to this approach, as focusing on different businesses can be a bad thing. In conclusion, Intel's Clearwater Forest chip and its 18A server CPU are going to be very important products for the company. If they do well, Intel could be a turnaround story. However, there are risks involved and investors should be cautious. The forward 1-year PE ratio is roughly 20 to 65 based on analyst expectations. While analysts may be bearish on Intel's prospects, if the company is successful, it could be a great turnaround story. And now, ladies and gentlemen, like, subscribe, and let's hit Intel's chart. This is a quarterly chart, 3 months chart. Each candle represents 1 quarter, and as we can see, since the peak of October 2023, 1 year ago, Intel has just lost 55% to the downside. This is the quarterly look. This is the monthly point of view. We just started October. This is how September was, 28% to the downside. April was 31% to the downside. As we can see, we are bearish on all time frames, except bullish on the weekly. We will take a look on the weekly, but quarterly, monthly, we are still in a downtrend. We have lower lows, lower highs. This is how it looks on the weekly. Intel in the past 3 weeks or so trying to get back to business. We had this major fall last week of July, and since then Intel is trying to get bounce back. Now the 24.53 is the resistance, long continuation, and we are heading to close this gap at the 29 area. This gap is from the daily, of course. This is how the daily looks. Always zoom in, zoom out to get a better point of view of price action. Intel, since the low of September, already gained until today's pre-market, October 2nd, 2024, 22%. Now, this area, the 22.30 area, the upper border of the yellow zone, needs to hold the support. We got ourselves back the sell signal on the daily. We are still bullish on the weekly because this trend is a weekly trend. We can also take trend lines, of course. We have these trend lines, uptrend channel. As long as we are inside this uptrend channel, the way is up. But this area, the 22.40 area, 22.30 area, needs to hold support. Otherwise, back inside the yellow zone, back into the 21.60 and 20.86. In my opinion, only a weekly close above the 23.34 will be a good sign to enter long on Intel. So I hope you found this video helpful. If you did, like, subscribe. Check the links in the description below for more educational information. Until the next video, stay safe.